When reading charts and understanding candlesticks, there's a story to be told. Anytime you spot a gap on a candlestick chart, that's saying there's technically an error in the chart. You see here with the two squares or rectangles that I've drawn out here on this 3-minute chart of the SPY, we have a void right here, huge gaps. 417 up here, the SPY gapped all the way down to 411 right here, creating this big void right there in the chart. That's considered an error in the chart. The stock over time came back up, retested resistance here at 413, trended back down, and we set up this descending wedge right here. Then we got a big gap up right here. And if you extend out the line right here from resistance, with this gap up right here, we were pulling back and we were holding all of this support right here, which was old resistance right here. So with us holding that gap up, what do you think people are going to want to try and do? They're going to want to try to fill this error in the chart. Prices run up, we correct the chart, and we fill this gap right there. That's a very, very popular strategy that a lot of traders like to look out for. Now with this gap up here, what do you see? We created another error in the chart. With this gap up right here, we've created an error right here. This big air pocket, that's an error in the chart. So after we've corrected this error in the chart, prices are going to come back down, and now short sellers, they gotta correct their error in the chart. So we have potentially all this room right here to fall to the downside. And this goes beyond indexes. It also falls into stocks as well. It's a popular strategy that a lot of traders like to look out for on all different time frames. And the bigger you spot this on a time frame, the more explosive the move could be. So if you spot a big error on a daily chart, a big gap to fill, let's look for an example real quick. I remembered one of them. So you see here SIGA, the ticker SIGA. Recently we had a little gap down right here with the error in the chart. Prices came down, we came back up, we've had resistance here, we fell back down lower, we came back up, found resistance again, come back down. Then we had a nice little run up right here. Now let's get out our little line, extend that line out here, and you see with this run up here, we filled that little error in the chart right here. After we filled that error in the chart, prices fell right back down, and prices fell pretty hard here because investors achieved what they saw in the chart. They fixed the error in the chart. It's almost like a self-fulfilling prophecy whenever you spot these errors in the chart. It's like all the investors get on the same page and they say, hey guys, there's an error right here. Let's correct that chart and fill it up. It could take a day, it could take a few days, it could take a week. I mean, it could take a month, but keep it on watch for stocks to come back around and fill that error in the chart. You will see it happen a lot. Real quick example here on Redbox. Zoom in right here. You see, I mean, it's a little one, but you see there was a little gap down right there, creating a little air pocket, but then the stock fell down and then it came right back up and it topped out right there. Little sloppy right there. And we filled that little air pocket in the chart. We still got one right there when we came down, and we filled this little air pocket right there. And then we got one way back here as well. So if prices ever fall back down here, people are going to be looking for it to fall down. And another way you can look at this too is if, let's say a stock is ripping to the upside and you see that there's a huge big error in the chart. What that's saying is there's no price action at that level. So prices can skip and run up through those levels. I wish I could find a really good example to show you guys. A perfect example I could kind of show you as of right now, because I don't have one on hand. But think of this big red candle here as a big gap down, like it's an error in the chart. So if prices come up through this level here, and you look left and you see that there's a big void in the chart right here, and prices push up through that, we have no history of volume or price action in this level right here. So prices can really skip up through this level because there's no resistance, and we ideally have enough room to run from 250 all the way up here to a high of $5. That's a big opportunity right there. And this is just a quick example to show you. Like, look at this one right here with the long upper wick, and we're looking at a daily chart. Perfect example. I just spotted that. Look at right here. Stock price was up here at $5.75. We gapped all the way down right here to $2.50. And then look at this long upper wick right here. We went and we filled that error in the chart right there in one day. And then once the investors and traders corrected the chart, prices fell back down. It's like everybody got on the same page and we said, hey, let's correct this chart. That's what they say. That's when you get more into like the philosophy and human nature of trying to read charts. And I tell you guys time and time and time again, study these charts. Pay attention to the details in the charts, because you will be amazed at what these charts will tell you. And it's a lot of stuff that people just easily overlook because they overcomplicate it and they throw on all of these unnecessary indicators, and it will blind them from all of the answers that are right in front of their face. Keep your charts clean, guys. I'm telling you. Keep your charts clean and listen to the candlesticks. They will tell you a lot of information. They will. This little trading strategy in the error in the chart and investors liking to fill the gap, it's a real popular strategy that a lot of traders have in their playbook. I seen another stock out here that recently had a big gap down and it's trying to come back up and fill it. I can't remember which one it was though. I'm trying to run through here and see if I can find it to give you guys another example. See, now here with ticker YMM, you see we got a gap up this morning, creating an error in the chart right here. So eventually over time, this stock starts to break down through that $8. We got all this room to free fall here down to $7 because there's no history in price action or volume at this void in the chart. And ideally prices can really free fall through that level, and short sellers, they're going to want to do the same thing. They're going to want to correct this chart because it's an error in it. I don't think I'm going to be able to find that other example. We had another stock we were watching. It had a huge gap down and it was on watch for breaking up and filling that gap. I forgot what stock it was. See, look at here with Snapchat. This isn't a good example here. Let me delete and remove this orange line so you guys can see it better. I'll remove all of these moving averages. We're looking at a 10-minute chart here of Snapchat. Everybody knows Snapchat, and most of you may have a Snapchat account. Snapchat recently here was up at $22 a share, and then it has this huge gap down right here. Huge gap down all the way down to $14. Prices continued to get driven down to $12.50. We bounced back up, and you could draw a line out right there. We start to break up over that line, and we start to try and run up now and start to fill some of this gap in the chart, but we stall out right there at $16 and we fall right back down. So we still have not filled this gap in the chart. So it's still an error that needs to be corrected. It doesn't necessarily have to fill this gap. This stock may never come back at all and fill this gap, but this is a strategy. No strategy is perfect. We know that, but we do see this strategy happen and work a lot. And we do see it fails from time to time, with it making its low end right here and a low right here. Watch for it to gradually keep trending up now, making higher lows as it makes a new low, higher low right there. Now, with this trending up, it could happen this week, next week. We could run back up again and try to fill even more of this gap and error in the chart. Same story recently with Netflix. Netflix just had a huge downfall. Looking here on the 10-minute time frame, Netflix was up here at $350 a share, and it had this huge gap down right here, creating an error. Now, as you see, since then, this stock has never came back trying to attempt and fill that error in the chart. This may never come back at all and fill this error, but it's a strategy people will be looking out for if we ever do come back up to this level, way up here at $250. We break up over 250. We have all this room to run right here, all the way up here, back up to $320. So that's just about a $100 gap right there. That's potential that people see. So just something to throw in your back pocket, put in your playbook, are gaps and errors in charts.